Welcome back, folks. Dow Industrials up 221, Nasdaq's up 236, S&Ps are up 43. Let's go over to our man, Mr. Teddy Kekstadt, as we do each and every Wednesday at 40 past the hour. And don't forget, folks, you can reach Teddy every trading day at forex-trading-unlock.com. That website is forex-trading-unlock.com. Teddy Kekstadt, what's happening, brother?
Oh, we got some interesting things to talk about today in the currencies.
I like that.
We had those signals that, we talked about over the past couple of weeks, and they had that follow through last week, and we were talking about how the bonds were coming into play. And I think that we're going to really start to see that divergence that we were talking about already over the past month. Remember, I said that once we get past inauguration and also into 2021, that the coronavirus trade is now pretty much off the table. Brexit is no longer it's no longer a topic. It's post-Brexit, and pretty much that's hashed out, so that's no longer a variable. So I think we're finally going to see that free-flowing divergence of currencies now. So I think we're going to see what happens between the Asian trade zone, the North American trade zone, and the European trade zone is going to be completely different when it comes to the U.S. dollar. So I think that the U.S. dollar bears and the U.S. dollar bulls are all going to get really scrapped up if they don't pay attention to these things.
Wow, that's pretty cool, man. I see what you're saying. So you're basically saying that, hey, listen, we've been Brexit for 4 or 5 years, we've been COVID for a year, and now you're saying that it's going back to the interest rate differential, right, for the world?
Absolutely.
Yeah, cool, man, cool.
Absolutely.
Okay.
So let me tell you why.
Okay, so we got to know this, folks. We got to pay attention here. Yep.
Absolutely. Little lesson here. So I looked at like the Euro bobble and the Euro shots and the interest rates in Europe and also in Asia. They've been pretty flatlining throughout this whole kind of craziness that we saw over the holidays where the bonds were tanking,
Yeah.
So and the 30-year is coming off its low. Remember last week it spiked a nice little bottom and we've seen a nice little bounce.
Yeah.
However, the bonds are coming off of lower move lows and lower move highs. So if they don't get above 170 even in the March or June futures contracts over the next few weeks, remember now that we're going to be heading into rollover in another like 6 weeks.
Right.
So this is not something that's happening over the course of like a couple days.
Sure.
So if the bonds continue to come back and hit support, then that's big for the dollar, okay? And this is where I mean it's big for the dollar. It means that you're going to not just necessarily be able to be super bearish the dollar. Okay, but it depends on your trade zone. So, for instance, your Australia and your New Zealand dollar right now, which have been making lower move lows and lower move highs, they're coming off of a low from a couple days ago, from Monday. Now, if they settle positive today, especially kind of like where they're at right now, they have a good chance at bottoming from that they will set a bottom on Monday, meaning that they can make a run for new highs against the dollar. We're talking multi-week and multi-month highs, okay? Now, that has a lot to do with the CRB stuff. Remember, we talked about commodity-driven trade, okay? So that's for just them. Now, the U.S. dollar yen, ironically, like today, the dollar is getting hit a little bit. It's getting hit against the dollar, but it's not against the Europeans, and this is where it really plays into this. Remember how, unless there's an actual dollar-driven bear or bull move, it's indicative of how the yen will move. The yen usually goes in an opposite direction than the other currencies when that's going on.
Okay.
So it's doing what it should be doing right now. Okay. So Asia right now, I would be very careful about trying to be a dollar bull. Okay. I would look to sell rallies in the dollar against these currencies, meaning be bullish Australian dollar, New Zealand dollar, and also potentially the yen. Okay.
Yes.
Now, when we get to the U.S. trade zone, now the U.S. dollar Canada, that slammed new lows today, okay? That's a bear. The U.S. dollar peso, okay, is also slamming new lows. Like anyone that's planning on going to spring break to Mexico in a couple months, you might be looking at 16 pesos to the dollar.
And we're at 19.5 right now, folks. So go buy your pesos now.
Buy your pesos now, absolutely. So I think that and that's a big deal for our trade zone. Remember, we just redid NAFTA over the past few years. Okay, so our whole trade agreements with the U.S., with Canada and Mexico have changed, and now this currency differential is going to have a big impact on whether we stay with that deal or if there's any alterations whatsoever.
And, folks, as Teddy's speaking, 6 months ago, the peso was 22.50 to a dollar. So, man, that's a percentage move, huh? Holy cow.
Absolutely. Now, when it comes to the European This is a totally different deal, okay? You have to look at like the pound. It made a higher move high today, spiking, but it's coming off of that.
Yeah.
Meanwhile, the euro and the Swiss have been making lower move lows and lower move highs against the dollar, meaning that the dollar has been bullish, okay? So I think we have divergence there where the pound, I think, is going to kind of needle these highs, maybe like just chop around and set a narrow trade, especially because I think that the U.S. dollar Swiss and can definitely probably make higher move highs. Now, I'm not looking at big ones, okay? And the euro US dollar, I think, can make newer move lows. So I'm going to give you some quick target points right now, okay, for all these markets, okay? So for the US dollar, Japanese yen, 104.41 is your pivot. Above that, you're looking for a breakout to the upside. Below that, probably neutral to lower, okay? Australian dollar, US dollar, 78.19 is your upside breakout point. If it gets above that, you're looking at a raging bull that will probably go on for months, okay? The New Zealand dollar, US dollar, 0.7095, that's your key pivot level. Any trading above that, which is the low from a couple of days ago, will keep this market definitely looking to go higher also, okay? US dollar, Canada, it's a rock falling down into water. I wouldn't try and catch that thing. Same thing with the peso. Be very careful with those. Sell rallies, you know.
Yeah.
Now, when it comes to the euro, I think that still has a chance to get down to about $1.1975, maybe even $1.18.5, you know, on an extreme, because the EU's got its own problems right now. You know, so, and I think that especially when it comes to the trade agreements and stuff, that's all hashed out. It's done. So now it becomes down to they're running out of money. They're going to have to keep on doing their Q, God knows what number they're on right now. You know what I mean?
Yeah.
So, and I don't think the trade between Europe and the U.S., especially with where the currencies are right now, is going to be very beneficial to the EU over the next 6 months. You know, so that's going to weigh on the euro. And the Swiss, I think, is just going to get a little bit of a boost, you know. So especially if it breaks out above 89.23, then I think you could see the Swiss get up to about 90 to almost 91 cents again. You know, not looking for parity runs or anything like that, but I think you could stretch the correction.
Man, I'm telling you, I love this education, Teddy. I really, no, I'm not kidding. I'm really serious. You know what I really just got, and the way you broke it down is that it really has to do with different sectors of the world, right? I mean, that's the reality, man, which is really cool, man.
Right.
Yeah.
And that's normal. That's normal in finance and trading. Like, we just haven't had that for a while because of Brexit, blah, blah, you know, whatever.
Yeah,
you know, so,
right. Because one thing was overtaking it on a continual basis, meaning for the dollar. I mean,
Yes.
Wow, correct. I can see that. And the yen, it's interesting this morning, that yen, I mean, that's why gold's going. Gold's up $30. The yen's down 43 ticks, man. That yen moves down and gets strong at all, man. Gold just loves it. It's
and the key thing to remember is, you guys, your watchers got to pay attention to the 30-year note in the March contract. If it stays below $1.70 basis points, okay, handles, you're not going to see a very bearish move in the dollar.
No, listen, the 10-year just got back inside its higher range. I know, by 2 ticks. Thanks, man. Have a great one.
Thanks,
Safe
guys.
one. Look forward to speaking to you next week.
Cool.
Stay right there, folks. Tom and I are coming right back.